The truth is, the only thing I advocate is if you have a portion of your portfolio that if you have money you don't need for 4 years and you want to hold it for more than 4 years, for between 4 years and the rest of your life, that's your long-term investment portfolio.
MicroStrategy is a visionary entrepreneur and a true Bitcoin OG. First investing when Bitcoin was just $9,800 per coin, he has become one of the most influential advocates for the cryptocurrency.
Bitcoin, Bitcoin, Bitcoin.
Saylor, the CEO of MicroStrategy, has led his company to make significant investments in Bitcoin, famously converting billions of dollars from the company's treasury into the digital asset. He believes that Bitcoin is the ultimate store of value in a world where fiat currencies are rapidly losing their purchasing power. By analyzing Bitcoin's historical cycles, Saylor and his team have projected that Bitcoin's price could reach astronomical heights in the coming years. They believe that within the next decade, Bitcoin could exceed $1 million per coin as it continues to gain acceptance as digital gold. Saylor's unwavering belief in Bitcoin's potential has not only transformed MicroStrategy, but has also inspired countless other investors and companies to consider Bitcoin as a strategic asset. If you enjoy crypto news, consider subscribing or liking the video. It's free, and you can always change your mind later. But without further ado, let's dive in with Michael Saylor and Bitcoin.
Then you take a portion of that and you buy Bitcoin, which is digital property. You know, if you want a diversified portfolio, I would say you buy some rental real estate or some real estate you're going to hold as a store of value. Maybe you buy a market basket of high quality stocks that you think will last for a decade or decades, or you buy the S&P index. And then you buy collectible items, trophy assets you want to hold your entire life, right? That's normally what goes in that basket of long-term assets. I think the apex property of the human race is Bitcoin. Bitcoin is Manhattan in cyberspace. If you think about investing in Manhattan as a good metaphor, the question is it too late to invest in Manhattan? Well, was it too late in 1680? No. Was it too late in 1776? No. Was it too late in 1865? No. Was it too late in 1914? No. 1945? No. 1976? No. 2000? No. What is the story of, and why is that, by the way? It's because Manhattan's built on an island. There's a limited amount of land. It's the nexus, the commercial center of the North American trade network or the Western trade network. Everybody with money and power wants to go through or needs to go through Manhattan at some point in time. That's been the case for hundreds of years. Everyone that ever bought real estate in Manhattan bought it from someone that paid less for it than they're currently buying it for, right? Mm-hmm. And why does it keep going up? It keeps going up because we keep printing more currency, right? So scarce, desirable assets go up forever. And in this case, is Bitcoin safer investment than Manhattan? I think so, because Manhattan competes with Tokyo and London and Paris, and Manhattan is just a physical city. Bitcoin is the center of the digital commerce or of the digital economy. It's like the capital city. It's the nexus point of the entire digital economy. And it has appealed to everybody on earth speaking every language. You could think of it as a city that's 276 blocks high, 276 blocks wide, 276 blocks deep. That is the integer cube root of 21 million. And when you're buying one Bitcoin, you're buying just one of those blocks. That's how many there's going to be for 100 years, 1,000 years. No one expects there to be any more. And why is it a useful thing to buy? Because it passes the Bernard-Arnault test. The Bernard-Arnault test says, I have a lot of money. What should I invest it in? I should probably buy something that someone richer than me, more cultured than me, smarter than me, will want to buy from me in 10 years. So when you look at the things you own in your portfolio and you think, will the smart money or will all of the global, intelligent, wealthy class, will they want to buy that from me? And if it's Picasso, probably yes. If it's 25 blocks in the middle of Miami Beach or 25 blocks in the middle of Manhattan, probably yeah. Right? If it's the Magna Carta, probably. Maybe it's a trophy asset in a civilization, but Bitcoin is the most popular, most well-known financial asset in the world that is an investment, right? I mean, it's second to the dollar, I suppose, as a pure financial thing. Everybody knows the dollar, but the dollar is not going up in value measured in dollars. So the dollar is only an investment asset for people in economies with hyperinflation. If you went to 10,000 rich families and you said, how'd you get rich? Not by buying dollars. How'd you get rich? Not by buying gold. Now that you are rich, what are you going to buy? Dollars? No. Gold? No. What are you going to buy? A sports team? Maybe. Right? Leonardo da Vinci paintings? Maybe. The Magnificent Seven stocks? Maybe. A Bitcoin? Digital property? Maybe. The one thing that's for sure they'll say is property. I own buildings and property in London, Paris, Tokyo, New York, San Francisco, LA, Miami. They're the ones that own the 3 acres on the beach in Palm Beach that's worth $250 million right now. That's what they're buying. And why? Because they know that everybody else with money in the world is going to be competing to buy that from them if they want to sell it. And because it's scarce, desirable. Now, the perfect capital asset is something scarce, desirable, and portable, durable, maintainable. Right? And what is that? That's Bitcoin. What was that over the last 500 years? Maybe trophy art.